Welcome to Illuminati Silver, where we tell you the truth about silver. Today is Sunday the 13th of January 2019, and we're providing our gold and silver weekly update for the week ending the 11th of January. Gold rose $3 last week from $1,284 to $1,287, having hit a high of $1,297 and a low of $1,279. In sterling terms, gold finished the week at £1,002. That's down £7. And in euros, it closed at €1,122. That's down €5 on the week. Silver fell 11 cents, from $15.71 to $15.60, having hit a high of $15.81 and a low of $15.51. In sterling terms, it closed at £12.15. That's down 20 pence. And in euros, it closed at 13.60 euros. That's down 0.18 euros. The gold to silver ratio rose from 81.7 to 1 to 82.5 to 1. The Dow Jones closed on Friday at 23,955, down 5 points on the day and up 562 points on the week. And the NASDAQ closed at 6,971, down 14 points on the day and up 233 points on the week. And the S&P 500 closed at 2,596, down just 1 point on the day and up 65 points on the week. Brent crude rose $3.34, from $57.06 to $60.48, and US light crude rose $2.63 from $47.96 to $51.59. The dollar index stands at 95.67. That's down 0.50 on the week. Gold prices seesawed last week virtually each day, but within a spread of around $17 for the week. This is clearly a consolidation period, with no significant driver in either direction. That said, Jerome Powell's recent comments and the FOMC minutes published on Wednesday clearly conveys the signal that the Fed will be backing off interest rate rises for much, if not all, of this year. We would still remind listeners, however, that the Fed's desire is still to deleverage its balance sheet and, if possible, get rates up to 3.5%. So although it is, at the moment, assisting markets with its dovish comments, rest assured, any sign of either the stock market rising near to its previous peaks or inflation raising its head, then those rates will go up. But we can all be reasonably certain that if it does happen, it's likely to be in the second half of 2019. Looking briefly at the economic figures announced last week, the ISM non-manufacturing index for December was slightly below expectations at 57.6%, compared with November's 60.7%. Consumer credit for November came in at $22 billion, compared with October's $25 billion. And both core CPI and consumer price indices for December were as expected at 0.2% and 0.1% respectively. Silver markets moved similarly to gold in a seesaw effect, having opened strongly only then to give up its gains quite rapidly. That said, we're still only talking about a spread of 30 cents between highs and lows, and so, like gold, we are in a consolidation period. Psychologically, the key levels are $16 and $15. Any break above or below these figures will result in at least a further $1 move in either direction. Meanwhile, our contention is that providing the dollar continues to weaken a little, $16 is more likely than $15. What we are not seeing in the markets, though, is what the YouTube channel experts are out in force stating, is that this is the start of a major bull run for gold and silver. Our view is it's just normal trading and pricing levels for this time of year, and frankly, with the economic and political negatives in the economy, both gold and silver prices should be quite a significant amount higher if they really were at the top of investors' priorities. So let's see what's on the economic calendar of significance this coming week. On Tuesday, we have the Producer Price Index for December. On Wednesday, Retail Sales and Import Price Index for December and Business Inventories for November. On Thursday, Housing Starts and Building Permits for December. And on Friday, Industrial Production for December, plus the Consumer Sentiment Index for January. Now, some of these figures may not be available because of the government shutdown. And of course, this is the reason the COT report has not been updated. So in conclusion, we see another week of consolidation, subject to any rise or fall in the value of the US dollar. Stock markets appear to have calmed down a little with a slight positive bias, but much is dependent on the US president's talks with China, plus of course a resolution to the government shutdown, both of which, if solved, will serve to improve market sentiment. Now a brief mention concerning our inner sanctum. We have published a podcast this week introducing Marcus Stead to our editorial team. Marcus is a British journalist, author and broadcaster, and will be covering a range of subjects which will be available on the website under the Inner Sanctum banner entitled Journal Marcus. In addition, he shall also be producing some podcasts available to all subscribers, both paying and free, and we welcome him to our team. As mentioned last week, and for the benefit of our listeners who did not hear last week's podcast, from Sunday the 3rd of February, our weekly update will be available free of charge to paying subscribers at bronze, silver, and eventually, when launched, gold membership levels. If you are none of these and do not wish to subscribe but still wish to listen to the podcast, it will be provided on our website for a charge of $3. We will add, however, that the new weekly update, whilst maintaining its relatively brief approach, will be more comprehensive than it is now. We shall also be showing some live technical analysis and where we believe the following week's gold and silver and other precious metal prices will move to. So, we are attempting to do our best to accommodate all parties, to give free subscribers and members access to some of our thoughts and opinions, and paying members to much wider and deeper information befitting the financial contribution they make each month. Meanwhile, we hope and wish each and every one of you a most pleasant weekend and a prosperous week ahead. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.